All right, guys, so we have FOMC very soon, and today we are going to be breaking down all the charts that matter. I have Paradise back on the stream today for our usual Wednesday slot, where we're going to go over the Bitcoin chart, our thoughts ahead of FOMC, what our trade plans are, and more. Paradise, welcome back to the stream.
Hey, Mars. Thanks for having me.
Well, run me through Bitcoin, bro, before we get into FOMC, my thoughts, my analysis. What is happening on the Bitcoin charts? What are you seeing?
I'm just trying to remember what we discussed in last week's stream. Basically, I think I was pointing out that we're at these key monthly levels, the old range high down here, the old range low up here. They look a bit funny this, but they are the monthly levels. But kind of what we were waiting for was to either see some sort of turnaround in this weekly FEG here, which is kind of what we saw. We're basically seeing divergences form down here in the oscillators. This RSI divergence is technically not valid because it reset at the 50, but in terms of just seeing momentum waning against price, it is definitely going in a different direction. But I think the most important line on the chart right now is just simply this red line here. We actually look at it from a structure perspective. Here's one I prepared earlier. Quite simply, you can see the BTC is in an obvious downtrend. Every support is lost and turned into resistance. Might be cleaner on line chart, kind of not. But you can see every time we form a support base, we lose it, we test a resistance, so on and so forth. That's been pretty reliable so far. And now this 84, 85K level, we've just failed to get above it. Pretty clean line in the sand. We have a daily FEG in there, which we've completely filled now, but we've had 6, 7, 8 attempts at wicking above that on the daily. And then when we go down to lower time frames, this is also, you're struggling to see it a bit there, but there's also the monthly open level. See that little MO on the black line there. So we're basically struggling to get above resistance, price support, and also the monthly open. So, kind of what I'm waiting for myself is two scenarios. One is a very simple SR flip. So we get back above this, we can consider maybe structure is starting to shift on a higher time frame. We can look for trades up to potentially the old range low, up at around 91, 92K. Or the third scenario, which I kind of like more, just because of how the market's liking to sort of treat people at the moment. May even get this in FOMC, I don't know. But I'd like to see a triple divergence form. I think that would be a really nice play. So basically this low here, lower low, and I'd like to see maybe a rejection here again and come down and form some sort of base there. And that would be another drive on the oscillators, but hopefully they would remain as a higher low. So that's kind of what I want to see, and that basically equates to just this low getting run over here down at 76K, or maybe we don't quite run it, but we just get within that realm. I think a big wick down to really scare people would be good. And the 3 drive pattern is pretty good for BTC. If we look at past data, it's actually signaled quite a few reversals on a higher time frame. So yeah, I basically got 2 alerts. It's either just for a third drive down into that and the momentum oscillators to confirm that as high lows, or just flipping this. Basically all, if you're not much of a trader or whatever, or it's confusing to you, you just simply need to draw this line on the chart, which is 84K. We got a daily close above that. Then we can potentially say the structure is starting to shift, and then we can look for acceptance up here. When I say acceptance, I mean for price to basically start trading up here. Maybe we'll get wicks below, we keep closing above it. And that would be the trigger to sort of get long up into here for me. But until then, there's kind of, I'm just low time frame intraday trading at the moment. I'm just kind of finding strong assets in the spaghetti chart. And yeah, basing my stuff off that or on the bots in the server. But yeah, I think this is pretty much the most important line anyone can have on the chart right now. It's this 84K level.
I want to ask you about the high time frame charts a little bit. I'll pull up my chart on Bitcoin. Obviously, we're kind of at the line in the sand in terms of the money noodle, which we spoke about last week. And then your next major support is 70K. This was the clear breakout level and resistance level for months and months and months during that summer chop last year. Do you think, what's your high time frame bias? Do you think we need to sweep this 70K region? Or do you think, this is a possible pivot point for us to start make our way back up to 91K? What are you seeing on the weekly chart specifically?
Yeah, so I was saying, I think it was last week's stream. So let me get rid of these lines. I've got kind of conflicting signals on both my systems at the moment. I have one for ranging, one for trending markets. In terms of trending markets, the weekly noodle reset has been phenomenal each time for signaling a new bottom for a reversal. When you line that up with the stochastic oscillator, sorry, the stochastic RSI, when it comes down into the reset zone, which is basically down to like under the 20 level, you time that with the money noodle retest. It's been a really good sort of barometer in the past. Now we're at a weekly FEG, which is strong. I think we get down to this level, it's not such a good thing. If there's any demand in the market, it actually wants to front run this 71, 72K level down here, because that would show that, people are eager to bid it. If we actually get down there and start accepting around there, then, I think we chop for quite a while. If we start accepting under it back inside this range, I think we chop for even longer. Effectively, we're not breaking market structure on the monthly till down here at 56K or whatever it is on the bodies.
It's a scary thought.
It is, but, structure could still be held, but it would mean losing the weekly noodle. And the weekly noodle has been, strong for signaling full cycles with trends. So, each retest has been bullish so far. So we're just assuming this will be the same. And like I said last time, like support until proven otherwise, same as resistance. This is dynamic support. So we're just sort of relying on that for now. I don't really want to see us trade down here, to be honest. I'd prefer us just to find some sort of bottom here, but I am really looking for that third drive down to confirm like a triple divergence on the momentum oscillators. But in terms of I think it's just because this candle was so ugly. We had that Trump news, and that basically we wicked down. Zoom in a bit on this. We wicked down into it, and we immediately closed back inside the old range low at like 91K, 92K, which was really bullish to me. And then the next week, we completely rolled over that move and traded back down here. And for now, we're still failing to close below the money noodle. Like we're just in the outer bands. We've wicked into it a few times. This FEG is getting filled. I pull up the VRVP. There's that gap I keep talking about in each stream. We've, filled, I'd say 80% of it, which is good. That's fine. So I'd like to see us flip that red line, that 84, 85K level, and start to trade up. And potentially this, could be a bottoming structure here. We just don't know yet. But, I think the noodle in the past, even here, like we didn't even close below here on this one candle. So this looked quite scary. It looked like it was about to lose it. I remember this one. And then we closed back inside and I sort of held my positions, and that was, the bottom there. Not saying this is the bottom. We probably could chop for a while here, but I think it's, in terms of trending markets, there's nothing to be scared of yet, just looking at this.
How are you playing FOMC specifically? In a minute, I'm going to run through my fundamental take relating to what matters in terms of Powell's speech and the interest rate announcement. But how do you approach trading around events like this, which cause, extreme volatility in markets?
Yeah, so we always get whipsaws around it. Generally, price, rips up, and how can I draw this? If we have a range, price will rip up, take out stops, rip down, take up stops, and then sort of come back to equilibrium. Then it chooses a direction, either up or down. Being in Australia, I'm always asleep when FOMC is on and CPI and all that. So generally, I close trades before bed, like if I'm trading intraday, or I move stops in a profit. That's pretty much me. I never really trade the actual event. I kind of just wake up the next day and see what direction was chosen, and then I sort of look for setups based on that. I think for 9 out of 10 people who aren't experienced traders, it's probably the way to go.
Better to wait, right? Get a bit of a feel for directionality.
Exactly. And if you get whipsawed, it's not just like you're getting stopped out. You're probably getting stopped with slippage, especially if you're trading like fairly illiquid altcoins and whatnot. So
it's not worth leverage. I think FOMC, for the average person, unless you're like news trading as in like Powell says something which is like very clearly bullish or bearish, like you open it quickly and then like you front run the market, then you close. Obviously, a lot of people news trade FOMC. I think that's the only exception. I wouldn't be taking like structural setups on altcoins on the lower time frames, because that kind of leads to you, as Paradise said, getting stopped out on either side.
Yeah. I think with news traders as well, it's like extremely hard game. You're trading against professionals with millisecond trading bots and news feed.
Crazy, bro. The edge. I've been researching news bots because I've been building some AI stuff myself. And what I realized is it's literally a fight for a millisecond. Like Bloomberg and, DB and Tree News, like they're all fighting for like a millisecond, and like that is their edge. It's absolutely insane, like the margins on those trades.
Yeah, I remember seeing Tree of Alpha when he was trading, waiting for Elon to tweet something about Doge in the last cycle. He basically had like a long short button on his terminal, but he'd stretched it out to be basically 100% of the screen, just long and short, above and below each other. So the second he got the feed come in, he could just like hit either. I think he made a decent chunk of money on that. But yeah.
I want to run through the fundamental analysis for FOMC quickly, and then we'll go back to you, and then we'll chat about the relation to the market and also altcoins, because I want to talk about alts in terms of where they sit relative to Bitcoin. I think the best way to do this and kind of summarize things is to look at Fabian's post. He has this macro channel in the Mars High Club. I think it's probably one of my favorite channels right now because we're in a really macro focused market. Like, it's pretty much a market being driven by headlines, being driven by Trump, being driven by interest rates. Unfortunately, for like fundamental altcoin investors that get their edge off information asymmetry in crypto, that is definitely taking a backseat to what's much more important in the market right now, and that is macro, and it's pretty much what everyone's waiting on. So it kind of makes these events even more important. This FOMC is even more heightened because you have a blackout period in April afterwards. So this is like the last decision until May. So it's clearly an important one that's probably going to shape the next couple of months. But I want to read out Fabian's take and summarize it because he does a much better job than me at summarizing these macro events and just letting you guys know, if you're watching the channel right now, which you obviously are, tomorrow I'm going to be getting Jordy on, hopefully, and he's probably one of the best macro experts in the space. He's made a lot of money, and a lot of his strategy is actually based on macro and his read of the market. So he'll be an amazing person to kind of break down the FOMC after it happens. So if you guys want to turn the notifications on, if you haven't already, hopefully tomorrow's video, I'm just waiting on confirmation from him, will be surrounding the FOMC and his take on the macro environment. And then next week, I've got Fajal on the channel. He's another amazing macro analyst who's going to be helping break down things even further. So I'm trying to get all the best players in the space relevant to the hottest topic right now, macro, on the channel to help you guys. So do make sure you're checking in on the videos because that's going to be really important stuff. And I think some of the learnings from those videos are actually going to shape my strategy, because my strategy is relatively hands-off right now. I haven't made, many big moves, but that could obviously change based on data that comes in and some of these other opinions. We can kind of put together a thesis and a game plan going forward pertaining to macro. But my stance right now is that, look, next month's going to be choppy, so I don't really want to be directionally too exposed to the long side. But just reading out Fabian's take pre-FOMC, and then in a few hours, potentially even when you're watching this, FOMC would have happened. I don't think it matters too much. I think this is still relevant unless there's a big shock. And then tomorrow we'll break it down with Jordy. He says, investors want to see the Fed signal a more proactive stance, that they are ready to supply markets with liquidity before things get a lot worse. Specifically, markets will be looking at three things to draw the signal from. 1, the revised summary of economic projections. 2, mentions of the exact date in which they will end QT. That's a big one. And 3, Powell's speech and tonality for hints of how they are adapting their stance in the face of recent economic and market developments. Powell has tried his best to remain steadfast about their neutral stance since the December meeting, and I don't believe that he has ample reason to change that now. Recent economic data hasn't given them greater certainty on how they should weigh the risk between inflation and growth/labor. They also skip a meeting in April, which gives them 2 months of data until the next FOMC, so they will not want to commit before then. That is a very important point, obviously, given the fact that there's a blackout in April. I don't know if they are going to be willing to commit to like a hard stance. That's why, Fabian points this out in the summary here. Furthermore, Powell knows Trump is trying to pressure him into cutting rates and likely doesn't want to change his credibility by caving in so soon. That's an interesting counterpoint. Like what we know, not counterpoint, sorry, point to back up the fact that they probably won't make any massive moves, because we know that Trump has been trying to lower rates, and the way that he's been trying to do that is to weaken the economy, weaken the stock market, thus weakening inflation data. We've seen inflation data coming actually down now. And the whole point of that is to try and get rates down, which can stimulate the economy in the long term, which will obviously be long-term bullish for markets. But Fabian's point here is interesting, that maybe Powell doesn't want to cave in too soon, and there's maybe a higher likelihood of him doing so in the next meeting after the Fed pivoted to neutral in December. In fact, it would benefit him if markets felt a little bit more pain first pertaining to Trump, but that's another topic. All said, I think Powell will try to stay as neutral as possible in his speech. The silver lining is that he may allude to the end of QT next meeting in May, which obviously everyone's waiting for, which could be well received by markets in the moment, although it's already largely expected, so probably isn't needle moving. Remember, the end of QT doesn't mean the beginning of QE. We've only really seen QE when rates are at 0 and we're still above 4%. So there's a long time until QE. If you're hoping QE will save the market, unfortunately, I think that is not going to come until next year, if that. So or at least much, much, much further down the track. But I agree with Fabian here. I think it's like, obviously there could be some shock or the market, might whipsaw, as Paradise said, but generally speaking, I don't know if we're going to get much resolution. I think the main thing the market wants to see is whether we actually get a definitive stance on QT ending. That could be a bullish case that maybe takes the Bitcoin up a couple of K. But if we don't get that, I think it's going to be relatively neutral and may end up being a disappointment for many that are hoping it's the silver bullet to rescue markets. That silver bullet maybe doesn't come until a bit further down the track, when we have the definitive ending of QT. And maybe Trump worsens the economy between now and then, which forces them to potentially go with a heftier rate cut. But obviously, I'm happy to be surprised. But I thought Fabian did an amazing summary there. He also did a follow-up post with all of the data and the stats. So if you're in Miles High Club, you obviously get access to all of those macro analyses that are posted every time there's a major event. So whether it be FOMC, whether it be an interest rate decision every single week or day when we get macro data, Fabian does his analysis, which is really, really valuable, honestly, in times during these when I think there's a major focus on macro. What we've also done in Mars High Club is we've added this macro research hub. So clearly with macro being such a pertinent topic at the moment, we want to make sure you guys are fully up to speed at all times with all the latest developments. So Nodi, who's one of our macro experts, has a channel. It's the macro channel where he basically updates you on FOMC meetings across the globe. So you see his update this morning on the Bank of Japan. He talks about NASDAQ seasonality, all the macro dates for the week. They're constantly updated. We go through the cycle, where we are in the cycle, different phases of the cycle. He does all of that. And then we have a macro chat, which is a chat just dedicated to macro. So if you want to learn more about macro, you can basically ask questions to our analysts, Nodi, Fabian, who are our macro experts, and they'll give their take and give you an answer. So I found that being like a nice exercise to do whilst the market's been relatively quiet, to actually continue to learn how this stuff impacts markets. And it's just all part of the building process. But yeah, hopefully you enjoyed that. Paradise, back to you.
Yeah, Fabian's channel's wicked, man. It's like the first thing I check when I get in the Discord each morning before my own channel even. It's a fundamental macro dummy that I am.
No, it's really good. It's probably my favorite. No offense, probably my favorite channel right now, just given the macro importance.
Yeah, I just wanted to go over DXY quickly. I think the first stream we did together, I was very keen to see this be a deviation and close back inside the 2-year range, which it did. But we kind of didn't see the correlation as much as we used to. Like BTC was kind of going down with DXY for a point. But what I'm seeing at the moment that I sort of noticed earlier today is we're seeing this like bullish daily divergences on the Awesome Oscillator and RSI. It's like a really clean div down here, just locked in and a sweep of a key low. And that's like a, if I put you can see it's like a high time frame pivot point as well. So kind of a good area for a bounce if we're going to get one. I'm not sure what that means for risk markets because, the correlation's been a bit off. But, if we sort of get a retracement back up.
The correlation has been off because this is like, it's weird. Like, okay, typically the dollar dropping is bullish for markets. Why? Because when the dollar drops, that's an indication that people are going into risk assets because they want to be more risk on. However, this dropping the dollar is part of Trump's plan to enhance US's terms of trade. So they can bring local manufacturing in and they get more value for money from their exports. So this is like almost a manufactured or an engineered drop in the dollar, whereas typically it's been a reflection of the market going risk on. So how much can you read into it now? I don't think much compared to previous times, just given the nature of the drop.
Yeah. I know kind of what I'm, scenario made in my head earlier. I would love to, because there's also resistance, right? This is lower time frame resistance. I'd love to see us trend back up here. We get that third drive down in BTC as DXY comes up. So this divergence plays out up to like the 0.62 retracement level into this daily FEG. Sort of mercs around there for a bit and sells off. And that gives us a third drive down on BTC in the meantime, gives us that triple divergence, which would probably be a great spot and, perps opportunity for a lot of altcoins and BTC. And then, this sells off again, and maybe we even come back down to the range lows, and hopefully that's like a decent signal for risk markets, depending if we get like the correlation hold or whatever. But so I'm definitely very keen to see if this plays out. I would love to see that line up, that third drive down in BTC.
It still could be a good thing, by the way, because obviously the dollar dropping forces a lot of investors to act. Now, of course, it doesn't mean they need to jump into stocks, but either they'll jump into other currencies, which is already happening, or they've hedged against the US dollar with puts, or they can go into other markets like the S&P. But actually, the European markets and the Asian markets have benefited relative to the US because capital's been parking like out of the US into other countries where the assets are denominated in other currencies. So it is a bit of it's a very unique situation. Trump's really shaken up the market with this tariff news. Totally makes sense why he's doing it. I did a video last week breaking down why that's the case, but definitely means potential pain for the markets in the short term. But a lot of that obviously has been front run. That's why we've gotten such a big dip.
Yeah. Looking at total. Yeah, total 3 is another one.
Yeah, let's talk altcoins.
Yeah, we talk about total quite often on here, but from the noodle perspective, once again, it's just been trending up the weekly the whole time. Stochastic resets line up with it every time. It's been a really good barometer. I'm currently retesting this like prior 780 billion support, give or take, the old market structure break. And we're holding here. We've wicked down below. I want to see us hold here and actually like get back on top of the noodle to actually trend up, because it's looking kind of very similar to the BTC chart in that respect. So I think
if it breaks, like obviously this is the line in the sand for alts, but
it's absolutely the line. Yeah, I mean this is always like the best positions you'll ever take are when you feel most sick in the stomach about it, right? Obviously that would have been a puke down here or something like this. This is now stabilized a bit, so it doesn't feel as risky. But a lot of altcoins like are looking brilliant at the moment. Like when I say brilliant, I mean in terms of this is RUNE. This is literally on the floor, but like this is printing. Back to on the chart. This is printing like very nice bullish 3-day divergences on both momentum oscillators. And like RUNE couldn't look much worse than this right now, right? And there's heaps of stuff looking like this. I think POPCAT's one I pulled up.
I guess the problem with RUNE is they were exploited. So I haven't stayed up to date in the last 2 weeks as to whether that's been resolved. But I guess just technically,
exactly. That's right. Technically, it does, but it does have that FUD that happened. POPCAT's another one. Really clean divergence printing here on the 3-day. This is backed up with the awesome oscillator as well. Once again, this is down like 92% off the highs or something. If we just look at these red lines, like a local range, this is like deviated below, reclaimed back inside. This could also do the whole triple divergence thing like BTC if it plays that sort of plan out. But I think a lot of altcoins are looking like decent for spot bid at the moment because they are showing signs of reversal in terms of momentum. They're down like astronomically from the highs, like 92% is just ridiculous. I still think there's a period of bracketing between these things. So maybe market stays choppy for a while and we just keep going like this. But this to me looks like accumulation range time, backed up with the oscillators. And even if these sort of divergences only play out up to the 50 level, like on RSI, because it's 50 on AO, this will still probably like equate to getting up to around the range highs. Or maybe then some, but
what's happened?
Could even get spot down here, and treat it as a trade. It's still like 130% move to the range high on a high time frame. So we'll see. There's a lot of stuff looking like this at the moment. Like a lot of meme coins look like they're due for a squeeze.
But what's happened? I just want to touch on that squeeze point. You can even show there's some charts that are squeezing at the moment. We're in this environment where so many altcoins are heavily shorted, like the funding on them has ticked so negative, it's insane. Like everyone is trying to short, and because of that, it doesn't take much of a move to like really push things higher, because what happens is shorters will either be liquidated or forced to close. So what you're going to see across the market maybe isn't a structural reversal, but you're going to see many altcoins which have been heavily shorted popping. It is a bit of a popcorn market because POPCAT, it's funny that you're showing the chart, but it's a POPCAT market, a popcorn market, because prices are just going to pop at any time. And we've seen this. I don't know if you want to show the MAVIA or TRB or some of these other coins, that have just exploded over. Yeah, LINA. Like we're seeing this, we're seeing these pops, and all that is, it's not necessarily they have a big catalyst or a big announcement. Maybe they do, but a lot of the time it's just they're shorted. And what happens when an asset's heavily shorted? Well, shorters need to close their positions, and what can happen is the ones that close first force price up, and that causes liquidations on late shorters, and that's why you see these squeezes to the upside. So this is why you really got to keep your eye, like if you're a low time frame scalp trader, you're probably enjoying some of these setups at the moment because you're able to get like very quick in and out moves. I don't know, all of us are scalp traders, but just keep in mind that coins can move explosively to the upside at any time. And this is going to happen a lot across, especially things like memes, AI that were so beaten down. It doesn't apply to on-chain stuff that doesn't have perp listings, but if a coin's on Bybit or other major exchanges with decent liquidity on perps, that's when you'll start to see some bigger moves. So just make almost a watch list of coins that are just heavily beaten down, heavily shorted. You can get the funding data off Velo or Bybit, and then look at some of the setups potentially, because I think there are a lot of trades there. You can set alerts, and if you're up, you can take those trades.
It's kind of tricky with some of these squeezes on higher timeframes. Like, like timing's the thing, right? You can actually be too early and sort of time yourself out by impatience before they actually squeeze. So I think make a list, and whatever you land on, have conviction in it. Because I mean, I'm sure this was caused by some sort of news catalyst. Don't know. I haven't looked into LINA for a long time.
Always, like I don't know, but like what happened with MAVIA? MAVIA wasn't, to me, triggered by any sort of news catalyst. It just popped. So maybe, it could also be the team. Like, I think there are many teams now that realize that it doesn't take a lot of capital to get a bit of a squeeze going, and then they can pile on with announcements. So I think you're going to see teams squeezing into an announcement, announcing something. Then that spot bid comes. That spot bid really ruins the shorters that are like hanging off a thread. And then you see a massive push to the upside. The only thing is these pushes will be short-lived, because after that, there's no actual spot bid to sustain. And there's a lot of people that on the sidelines that want to short pumps right now, because the dynamic is still structurally bearish. So a lot of these will end up round tripping and going back down. So please don't view this as a structural shift from a downtrend to an uptrend. View this exactly what it is, a short squeeze, which is an opportunity to either, de-risk or make some money on low time frame trading on these alts.
Yeah, and I think you keep, like, once they start, you kind of see them pop off in succession, because people start cluing in that, right, things are short squeezing one after the other. It's kind of the rotation.
Everyone's noticing. Everyone's noticing now. This is happening.
This is a wild chart, though. Like, look at this. You see that squeeze today on the 4 hour looks huge, but like, look how down it is. It's ridiculous. But yeah, I don't know what's going on with LINA. I actually posted this in the group this morning, down around here, around the bottom red line. I was like, right, maybe a retracement to that. It's the first sort of sign of a reversal. Maybe structure's starting to shift on a reclaim of that, and then structure's actually shifted here. But this is squeezed way harder than I thought. Definitely caught me offside. I was waiting for some sort of retracement on this. I think EOS is something as well. Like, I don't know why, but that's just ripped up into new highs. Could be once again same thing, but. Do you know of any like catalysts around these coins or any news?
I don't. Some of these are such like dead coins historically.
Yeah.
So it's interesting.
So I think that's what's happening. Yeah.
Are there any coins in particular you think have very good setups that you're monitoring at the moment?
PEPE looks good on a high time frame to me.
Interesting.
At this high time frame weekly level, kind of doing like a deviation here, looking for the reclaim of it. I think. Yeah, so this is pretty clean to me. I'm just trying to figure out what time frame I had this on.
My first 100x ever in crypto, so this always will take a place in my heart.
It was one of my biggest from 2023. I've been holding the bag, so yeah. Well,
it'll come back at some point. I think it's one of these that actually has the legs to. I think a lot of other memes are dead, but I think this can come back at some point.
PEPE, sure. Yeah, I think like your Moodangs and Peanuts or whatever, probably.
Yeah, they're short-term fads, but this is like a structurally important meme, I think, now in today's culture.
I really like PEPE just for the, it's just that thing I was drawing before, like in BTC, these SR flips. PEPE is just currently pushing into this, but like this is a deviation under, a very high time frame weekly level here. This wants to work. So we get back above this level here, and I'll look to take a position up into the former 3-day resistance up here, this cluster, basically a supply level. So that's one I'm watching. EOS I'm actually interested in just for an intraday trade. I only found that just with starting the stream, so need to look into it more. But like, got the sweep of the high up here. If we get some sort of pullback into this breaker, the monthly open, interested in that. Got some alerts set on there. CRV is a trade I'm in currently with the group. That's just like a low time frame thing. But I think CRV looks quite good. I quite liked how it started breaking above the monthly open this morning. I was just looking for a low time frame pullback, which we got. Just want to see that push up into the H4 supply up here. And I think ETH as well looks decent in like a lower time frame range. So this is like an H1 range here. I've got a pocket of equal highs up here. I'd love some sort of like FOMC whipsaw and we get potentially a fill down at this H1 FVG in the golden pocket. Stop at the lows and just target these highs up here. Could make for quite a nice move. It's like a 3.5% move. But other than that, no, not really. Just sort of just taking whatever comes up in spaghetti chart. It's quite a low.
But there are trades out there. I think that's the summary. Like there are.
Oh, there's so many out there at the moment. Low time
there
frame.
There are
though.
Opportunities.
Yeah, I've been taking intraday like 15-minute to 1 hour trades. I haven't really been taking any swings.
Like in your channel here, there's lots. Like even over the last 24 hours, EOS, Eigen, ALCH, ETH, LINA, like, and people are trading a lot. Like in the Traders Hub, this has been the most. We just launched this recently. This has been the most active channel. Like everyone's trading. We've got a really nice community now of serious traders that are locked in. Like even though the group has less members now, obviously because the market is more bearish, what I've liked is that the ones that have stayed are really now committing to learning and building. And it's honestly really been cool to see that community thrive amongst the rest of the market.
No, it's really good, man. Just released a new exercise today as well, like a homework thing. But I think those bots have been a saving grace. They're just basically finding setups for people. Yeah. Day in and day out, finding setups for people, which is really good. So, some of those ones I posted in the channel before, like Eigen, ALCH, and that's just stuff that's come up in the bots today. I just sort of investigate it every hour, every 4 hours, just check what's there. It doesn't take long, and then, you got your setups for the day. It's actually quite good. You can actually just come in and grab whatever setups have happened over the last 8 hours. Yeah. That's kind of your daily watch list, and you can repopulate it the next day.
It's amazing. When's your next live stream in MHC?
Friday.
Friday? Yeah.
Yep. That's an education one though. So
they're the best ones.
Concepts. Yeah, exactly. It's where I thrive, I think. It's more fun than the market outlooks. Yeah. Other than that, kind of just, going on whatever comes up throughout the day, and that's pretty much it.
Let's end it here because I think if we do see a little bit of volatility, things are going to change. So I think this is a good gauge on where the market's at. But obviously tomorrow with Jordy, we'll break down the fundamental side of where the market's sitting in the macro lens, and then you'll have your Friday stream in MHC. Obviously, we'll be updating people all night whilst FOMC happens, and then we'll also be back here next Wednesday to kind of review where we're sitting.
Yep, sounds good.
Thanks for joining. Thanks for updating the audience, and we'll catch you guys in the next one.
Nice one. Thanks for having me. See you guys next time.
Peace.